Welcome back to our intermediate financial accounting class. This is our last segment about leases. We've talked about so much cool stuff, from what a lease is and why it's important and how they get calculated and what the journal entries are and determining what category or classification we're going to use, and lots of cool examples. We ended last time with the amortization schedules for our last example. And I asked you when we finished the segment to finish up the last amortization schedule. We're going to take a look at that now and then use all of those amortization schedule numbers to do the necessary journal entries. So let's go ahead and take a look at that schedule. We started with that $99.79 as our beginning liability balance. We make three payments of $34,885. You can see the interest that we're going to end up paying. So hopefully you got all those numbers. You came out to a nice even zero, which is what we wanted. And with those numbers, we're ready to jump in to our journal entry. Now we're going to do both sets of entries. We'll do them side by side so we can see what happens on each day. So we're going to start on March 30th. This is the day the lease was signed. So let's start with SLC, our lessor. They're going to record a net investment in leases of $100,000. If you remember, the calculation for this is the sum of the beginning value in our unguaranteed residual plus the lease receivable amount. So let's go back to our tables and take a look. Our unguaranteed residual amount was 0. That makes it really easy to add in. And our lease receivable is $100,000. So even I can do this without a 10 key. 100,000 plus 0, that's 100,000. So that's where that number came from. The other number that we need to know is what we paid for it. And we were told in the problem that we paid $75,000 for this equipment when we first bought it. So that's our other number. So we'll credit equipment. 75,000. And the difference between the two is either a loss or a revenue. In this case, we have a revenue since we need a credit. And this is to record the net investment in leases and our sales revenue. In addition, because we don't include the initial direct costs as part of our calculation of the sales revenue, we don't use it as sales revenue because I get my sales revenue just from the difference between what I paid and what the lease is worth. So instead, I simply write them off as a lease expense. $1,500 that I paid, payment to create the lease. And those are my journal entries on March 30th. For Samson, I'm going to create a right of use asset, and we just calculated this. It was $104,079. It was the sum of my lease payable and my initial direct costs. In addition, I'm going to record a lease liability of this $64,194 because I'm going to include the cash that I've already paid out as part of this journal entry. And then I paid cash of $39,885. That's $34,885 to the lessor and $5,000 in closing costs and other initial direct costs, so lawyer fees, etc. This is to create the right of use asset. Oop, I should put asset up here too. And my lease. And that's March 30th. Now let's take a look at 12/31. The end of the year, and we'll go ahead and start with Samson since that's the color of pen that I've got. So what I need to do first is record an interest expense for them, and that's going to increase my lease liability. This is an adjusting entry for lease interest. And normally I would just grab the value from the table and be done. But I can't do that in this case because it hasn't been a year. Remember, we're running from March 30th to December 31. That's only 9 months. April, May, June, July, August, September, October, November, December. So I can't use the whole amount. I can only use 9/12 of it. So I'm going to take the 51.36 from my table and multiply it by 9/12. If I round that to the nearest dollar, it comes out to 38.52. And that would be my journal entry for interest for the lessee. I also would include amortization expense, for lease depreciation. And again, the same thing's going to happen with this as did with my interest. I'm only going to be able to record part of it. Now in this case, I get to keep this asset. So I take the 104,079. The salvage value is 0. So I just divide by the 7 years, and I can use all 7 years of its useful life. I get 14,868, and again I need to multiply. It's only been 9 months, so that gives me 11,151 as my amortization expense. Now I'll only have to worry about this first year on amortization expense because I'll just get you straight line depreciation after this until that last year. Now the same basic thing needs to happen for SLC. They record a net investment in leases as a debit, and they get to record interest revenue. This is an adjusting entry for interest on my lease. And normally this would be the sum of the interest that's in my table, which if you go back to your table is $4,557, plus the amount that's in our unguaranteed residual asset amortization or unwinding of the discount, but that's a 0 because there's nothing unguaranteed. So I just have to worry about this one piece. But again, I'm going to multiply that by 9/12, and that's going to give me 3,418. Last thing I need to do, I've got to keep track of that net investment in lease account. So it starts at 0. We added $100,000 to it. Payment was made for $34,885, and then we added this $34,818. So I'm going to end the year with $68,533, and that's going to give me everything I need for both SLC and Samson for year 3. Now I want you to pause it here and do the journal entries for year 4 before you move on. Everything's going to work just like we practiced in the past, except for one minor difference, and that is when you receive the payment as SLC, you're going to have to record that last 3 months worth of interest revenue. When you make the journal entry for Samson, you're going to have to record the last 3 months of interest expense. So that's going to be part of that journal entry that you need to do. So other than that, everything works the same way we've done in the past, and then uses the 9/12 calculations on 12/31 of year 4 as well. So go ahead and give them a try. We'll talk about it here in just a minute. Now that you've tried the journal entries, let's see how you did. For SLC on March 30th, we would have recorded the cash coming in, $34,885. Not all of that gets to reduce my net investment in lease though, because I need to record that last 3 months worth of interest, and that's that $1139. And then the balance goes to my net investment in lease. At the end of the year, I would record interest revenue. Again, it's just going to be 9/12 of the 2434 that's in my amortization schedule. That's SLC's entries. Samson's entries, same basic idea. Cash going out of $34,885. It doesn't all get to reduce the lease liability though, because I have to record the rest of the interest from that first year. So if I take the $5136 minus the $3852, that gives me this $1284, and then the balance pays off my lease liability. In December, I now get to record a whole year's worth of amortization because I've owned it from January to December of year 4. But instead of recording all of the interest expense, I would take the $2756 times 9/12, and that gives me that value. The last thing you need to do to wrap this up is SLC's net investment in lease T account. Started at $68,553, credit to the account of 33,746, debit of 1826. So we end year 4 with 36,613. And those are all of my year 4 entries. Now hopefully that all makes sense. I'm going to give you one more opportunity to try it on your own, doing the year 5 journal entries, and then when we come back we'll talk about them, and then we'll do the year 6 as it wraps up together. So again, pause it here and do the journal entries for year 5. Now that you've had a chance to look at year 5 and do those journal entries, let's see how well you did. Hopefully you got all of these right within $1 or $2 for rounding. Let's take a look. Again, cash coming in of $34,885, but I don't get to credit net investment and lease for all of that. I've got to record the rest of the $24,34 interest revenue. So I take the $24,34 minus the $1826 that I recognized on December 31st of year 4. That gives me the $608, and the balance goes into net investment and lease. On December 31st, I recognize 9/12 of the last bit of interest. That's 164 times 9/12. That gives me that 123. For the lessee, same basic idea. I take the $34,885. That's the cash I'm having to pay. Doesn't all get to reduce lease liability though, because I need 3 more months of interest expense. So I take the $27.56 minus the $2,067 we recorded on December 31st of year 4, and then the balance goes into lease liability. On December 31st, again, I get to record all of the amortization because I've owned it a full year and it's straight line. The interest expense is the $184 that we see in our amortization schedule times 9/12. Of course, I also need to do my T account. Got to make sure that number is right. So there's my T account. 36,613 is what I ended with last year in year 4. The lessee has paid off 34,277. We add in 123 as our interest, so we end with 2459. And now we're ready with all of these journal entries to look at year 6. On March 30th of year 6, we get the final set of journal entries for this lease. So this is March 30th, and we'll start with SLC. They're getting cash of $2,500, a final payment by Sampson to own this asset. Interest revenue, again, we have to record 3 months of that last bit of interest because I didn't recognize all of it at the end of last year. So I take 164 minus the 123, and I record interest revenue of $41, and the balance goes into net investment in lease. That's $2,459, and that's the final purchase of leased asset by lessee. For the lessee, on March 30th, I would record first the payment that I made. So lease liability, interest, expense, and cash. Cash will be the $2,500. Interest expense will be the 184 minus the 138 that I recorded at the end of year 5. So I've got $46 left, and the balance, $24.54, will pay off my lease liability. Final payment on my leased asset. Now, as far as my lessor is concerned, and as far as the payments are concerned for the lessee, this is done. Take a look. Here's my lessor's T account. We started with $24.59. I pay off $24.59. That's all that happens, but I end up at 0. So as far as SLC is concerned, this is done. My net investment in lease is 0, and I don't have the asset anymore, so I'm finished. But as far as Sampson is concerned, there's one more step. You see, they've been accounting for this as a right-of-use asset with amortization instead of depreciation. So we need to get it out of the right-of-use assets, get rid of the amortization, and get the balance of it into a normal PP&E account, machinery, equipment, etc. So the first thing we need to do is we need to record the last of the amortization because 3 more months have passed. So amortization expense and accumulated amortization, and this is depreciation on leased asset prior to transfer. And I'm going to take the 14,868 times 3/12, and that's going to give me 3717. That's going to be the last of my amortization from the time I started this leased asset to now. And now I'm going to move it. So I'm going to get rid of the right of use asset, which was originally 104.79. I'm also going to get rid of the accumulated amortization. And let's see, I've got 3717 right here. I've got 14,868 here in year 5. I've got 14,868 in year 4. I've got 11,151 back in year 3. So essentially, I've got 3 full years of amortization. 9 months, 12 months, 12 months, 3 months of amortization. And that comes out to a total, if you add all those up, of 44,604. So I get rid of the right of use asset, I get rid of the accumulated amortization, and I'm going to put the rest into equipment, although you can use machinery. 59,475. And this is to transfer leased asset to traditional asset. And that is it. Now, we've talked a lot about leases, all sorts of calculations and journal entries and methods and rules. Hopefully you're feeling comfortable with this because it is such an important topic and is going to be for a long time as we settle things down after this huge upheaval. So again, really important to be comfortable with and know these rules. We haven't talked about all the possibilities, just the most important ones, and hopefully you're feeling comfortable with those. With that, we're going to wrap up our discussion of leases. When we come back, we'll be starting a brand new module. Fun stuff. We'll see you then. Thanks.